with loan forgiveness, you're now entering a totally different phase. And I caution everyone to think of it as a different phase because there's different requirements, different pitfalls, and different opportunities for businesses. One of those things is when you apply for loan forgiveness, you are claiming a certain amount of money on your triple P loan was used for certain proceeds to an extent and is forgivable under the CARES Act or subsequent bills. Part of that includes a reduction. So if you apply for $100,000 in loan forgiveness for a triple P loan, they currently reduce that loan forgiveness amount based on any deficiencies in the number of employees that you had at the end of your covered period compared to when you first started the covered period and even before the disaster. And then also any reductions in salary, any deficiencies in salary, wages, benefits, you will get dinged and get another reduction in loan forgiveness. Further, the PFA actually added an exemption to some of those reductions. If you cure either the number of employee or the salary deficiencies in your triple P loan and your use as a business, you then get full forgiveness. You don't get any reductions. The PFA adds another exemption to those reductions where if you make an offer to rehire employees and use your triple P loans for that, and your employees say no, or they're unavailable, or you offer it and you don't get any acceptance of your offer, you're not going to get reduced. The PFA also adds if you can't hire anyone similar to those employees. If you try to rehire and then can't get them to accept, and so then you go to another person and you try and hire them with the same skills, and they won't accept, whether because of unemployment benefits or another reason, you as a business are not going to get dinged for that too. And this is a great benefit for businesses because it ensures that you're going to get more forgiveness. Because it's going to be very easy, especially in the hospitality business, to be in an instance where you can't hire anyone because you're not open, per CDC, per HHS regulations and guidance. So that's a huge boom. Some of the risk in applying for a loan, forgiveness, is that you're opening yourself up to review by SBA. And SBA, as everyone knows, has been hit hard by Congress and public opinion for how the triple P loan program has been implemented, how it's been run. And the stories of Shake Shack and the Lakers and big businesses getting these loans has not helped. So as part of the loan forgiveness process, they can review your initial application and see if you were eligible. They can review how you used your proceeds. And by doing so, SBA is ensuring that one, the right people got the loans, and two, they used it for the right thing. And if they find that you did not deserve a loan or that you did not use it for the right things, you're immediately going to lose forgiveness, and then you're also possibly going to have to repay the loan quickly. And both of those instances are horrible for businesses, whether they're big or small. Similarly, if a business had gotten a triple P loan and they did it for especially over $2 million, you may or likely will get hit with an SBA audit sometime in the next 6 years. And that audit is going to review your application, review how you use the proceeds, whether or not your certifications were in order. And those certifications can be the size certification, could be affiliation. Most importantly, it could be the economic need piece, which I'm sure everyone knows about, whether or not you have other sources of liquidity, other sources of cash, credit, etc., that don't make a triple P loan necessary. SBA has been very nondescript with what that means. A lot of SBA reps have been kind enough to say that this is a very factual thing, so businesses should be holding on to state order declarations saying stay at home, any declarations preventing them from opening or operating in their documents with a triple P loan, because they'll eventually get hit with this audit. Last, I would also say, if you apply for loan forgiveness or you apply for a loan generally, or even you get hit with an SBA audit and the finding is not favorable to you, whether or not you got denied for your application, you got denied for forgiveness, or SBA reviewed your application and said, nope, you really shouldn't have gotten this, or you used it improperly, there are procedures for you to appeal that decision within SBA. And we're hoping that we'll see regulations on how the loan forgiveness appeal process will work. But always remember that it's not the final decision. If Will got denied for PPP loan forgiveness because they said he's not a small business, I would be the first one to challenge that, because Will is a small CPA firm. I am a small law firm. If they said I wasn't small, I would immediately challenge that. And there are procedures listed on SBA's website, in the regulations, and in the statute that say how to go about that. And if that happens, don't be forlorn, because it's a good argument, especially with economic need, that you do need this loan, or that you are small. It's just if you're on the line, you really need a professional to help get you underneath that line to maintain your size. Will, does that all make sense? Did I bungle anything?
No, that definitely makes sense. And it just to give everyone an example. So I think there was a case not too long ago, right? Didn't a couple of guys over in Jersey or Rhode Island, didn't they try to scam the system? And they got they almost got a couple $1 million, and they created all these fake payroll returns, and they got nabbed by the FBI. So they're definitely coming down hard.
Yeah.
Even for legit businesses that have that amount of money, it's you think about it as, if someone were to win the lotto, they say, it's life. It's not all it's not all it's supposed to be, right? You get $2 million, right? Even in a big company, there's sometimes there's opportunities to kind of, oh wait, well we can pay this off, we'll pay that off. You have to be very careful, because that's a lot of money that they're giving to you in such a short amount of time. You definitely want to, just like if you were a small business, these big businesses that are getting these $2 million loans, still segregate those funds and just draw from that one account qualified expenses. It'll make everything a lot easier.
Yeah, I would definitely. I would also say SBA and federal government's well-intentioned. They want to help businesses, especially right now. But think about it this way. They have a finite amount of money that they're trying to give out to help the smallest of small businesses during this time. They've now found out that there are big businesses that are taking advantage of the program. They are going to go tooth and nail to figure out who those people are and try and take away that loan. And you don't want to be on the wrong side of that just because you didn't file your application properly, you didn't keep accurate records, you didn't keep proper documentation of what the circumstances were behind your loan. And if you also think about forgiveness, federal government isn't going to be able to forgive everyone's loan to the maximum amount. The entire government would go bankrupt. But SBA wants to make sure that you're eligible for the amount of forgiveness you get because of that. So don't think of it as them trying to attack your loan. Think of it as they want to be prudent in how they're giving out forgiveness. And with that, they're going to try and attack you on size. They're going to look at your affiliations to see if they can kick out your loan that way. They're going to look at whether or not there was an economic need because you have $2 million in cash sitting in your bank account that you could have covered 6 months of payroll with. All of those factors are going to come into whether or not you get forgiveness and whether or not they immediately cancel your loan. So just be careful.